welcome back. Well, AFEX Commodities Market updates on the AFEX Commodity Market Summary for the week of June 8th to 14th. We saw over 70% drop in the number of deals. Michael Martins, the portfolio manager of AFEX, has some explanation to do. Good morning, Michael. Thank you for joining us again this Wednesday.
Hi, Ine. Good morning. Thank you for having me once again. It's always a pleasure to be here.
Good to have you too. Well, so we saw there was a drop in the number of deals, but you give us a full picture of activities for the week in review.
Thank you very much, Ine. So if you look at the table in front of you, which speaks to the commodities market summary, we saw an increase of 26.58% in the total number of transactions on the exchange in the week under consideration, from around 235 million naira to close the trading week at 298 million naira. The total number of contracts traded on the exchange also went up by 10%, from 13,793 contracts to 15,173 contracts. We, however, saw a significant decline in the number of deals happening on the exchange to fall by 70.59%, from around 35 deals to close the trading week at just 10 deals. The AFEX Commodities Index, which is the ACI, also fell slightly by 0.97%, from around 397.08 points to close the trading week at 393.23 points. The AFEX Export Index, which comprises of ginger and cocoa, remained unchanged in the week under consideration, remaining at 150.08 points. With regards to the volume of contracts traded on the exchange, we saw significant volume movements with regards to maize, which fell in the week under consideration from 13,483 contracts to 13,220 contracts. We, however, saw a significant increase in the volume of contracts traded for cashew, which went up from 200 contracts to 1,952 contracts. All other commodities on the exchange were traded in little to no volume in the week under consideration. With regards to price changes on the exchange, we only saw gains in the price of soybean, which went up by 0.26%, gaining 82 naira in the contract value to close the trading week at 31,600 naira per contract. With regards to the top losers for the week, those would be paddy rice, which fell by 4.82%, gaining 1,045 naira in the contract value. Losing rather 1,045 naira in the contract value to close the trading week at 20,650 naira per contract. Another loser for the week was cashew nut, which fell by 3.26%, losing 1,450 naira in the contract value to close the trading week at 43,050 naira per contract. And last but not least, for price of commodities, we saw maize fall ever so slightly by 0.03%, losing just 6 naira in the contract value to close the trading week at 19,194 naira per contract. And lastly, we have the fair trade exchange traded commodity, which went up by 1.52% in the week under consideration, gaining 202.30 naira in the contract value to close the trading week at 14,220 naira per contract. And of course, if you always want to know more about what goes on in the commodities exchange and more broadly about the commodities market, we always advocate that you check out our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can always download our app, which is available on Google and iOS.
All right, Michael, well, the inflation rate dropped to 17.93% in the month of May in comparison to the month of April. But what are the insights can we draw from that data in relation to the commodities market?
Thank you very much, Ladi, for that question. And I think this flies in the face of a lot of what analysts in the industries have already said, or in previous weeks, where we sort of advocated that we're going to have a high inflationary number. It is the case that if you look at the data from a year-on-year perspective, the inflation rate has actually fallen from around, I think, last month, which was 18.12%, to this month, which is around 17.93%. But what I'm more so concerned about, especially with regards to the commodities market, and this takes into account the timeline for the commodities market, which is about a 9-month period, is what happens on a month-on-month basis, right? So in the month of April, we saw prices increase on a month-on-month basis by 0.97%. But then in the month of May, we saw that price increase go up by, I think, approximately 4 basis points to around 1.01%, which essentially means that, you know, prices are rising on a month-on-month basis across board. But what this essentially means, regardless of whether or not we believe that, or the data actually speaks to what is actually going on in the open market, and that's the, you know, with the broad community of people who are actually trading this staples and commodities is that we are in a high inflationary environment. Whether or not you believe the figures to be actually be 18% or 17%, we are essentially in a high inflationary environment, and there are two broad implications for that. The first, and it depends on where you are on the spectrum, on the economic spectrum, right? So last week we had a conversation about food security, which essentially speaks to two things, right? First of which is the availability of commodities or availability of food, right? To which AFEX has done a significant, has put in a significant effort in that with regards to our input financing program. But more so would be the affordability of food. When you're in a high inflationary environment, it means it's increasingly harder for people to be food secure, right? Because on one hand, you live in a higher unemployment environment, which essentially means that less people have incomes, and then on the other hand, it means that even for the people that have incomes, it is becoming increasingly harder for them to purchase the same amount of food that they were able to buy last year, which essentially means that it's not much harder for us as a country being in a high inflationary environment for us to be food secure. For other people who play in the other end of the spectrum, this would essentially be investors who have a lot of capital at their disposal. It essentially speaks to something slightly different, and that's to say, how do I allocate my capital in a high inflationary environment, especially considering that all the traditional asset classes are not particularly doing well, right? So if you look at the 365-day Treasury bill, it's just around 10%. If you look at what is going on the Nigeria NSE All-Share Index, we're down approximately 4% for the year. It's not essentially, it doesn't especially speak to the fact that, there's a lot of places where people can pack their capital at the moment, which is why we, at AFEX Commodities Exchange always advocate that people start allocating, a significant portion of their portfolio to alternative assets, and in this case, of course, the commodities market, which promises. In any given period of time, a significant return on your investment.
All right, Michael. Thank you so much. Thank you so much, Michael, for bringing us up to date on happenings in the commodities market. Well, we're not away from AFEX. Apart from the price movement, AFEX is interested in current structures for investing in the commodities. And this is because the commodities market is evolving, with new investment products being created and new structures being put in place for easy entry of retail and institutional investors. Yusuf Ogumbi, the investment manager of AFEX, is here to share the interest of AFEX concerning this. Good morning, Mr. Ogumbi. Thank you so much for joining us.
Good morning. Good morning. Nice to be here again.
Good to have you here again. Yeah, so how was the investment structure in the Nigerian commodities? How has it evolved so far?
Thank you very much for that question. The commodity space in Nigeria has evolved significantly over the last 10 years, more so with the entry of AFEX into the market. What we now see is a situation where we are moving away from the informal to the formal market, where you now have structure, transparency, and processes coming into place. You can now see that kind of situation bringing about improvements in products, increase in the number of participation of investors, and then depth in the market as well. So the evolution, although we are still in very early days, but then the evolution has started, and we are looking towards the growth moving forward.
All right, but what is AFEX bringing to the table as added value in the Nigerian commodities market, and how can I use this market to hedge against inflation?
Quite a lot, quite a lot. AFEX is bringing quite a lot of innovation into this market. First of all, one thing that we've seen is the importance of infrastructure in deepening the efficiency in this market. So that means that you can now trade, settle, and clear your assets quickly. And then the second thing is transparency. You can then have a situation where whatever assets you hold, you now have a clear visibility as to what you are holding. And this is against what you used to have before, where you then need to go to places like Taraba or Kaduna and then go and buy the physical maize, store it in a warehouse, and then have to visit that warehouse consistently. AFEX is bringing that efficiency and transparency into the market. That's the first thing. And that extends into your second question, which says that how can you then hedge against inflation? Over time, we've mentioned the almost one-to-one relationship between the price of commodities and inflation numbers, and by extension, exchange rate as well. And this also means that once you are able to impose the efficiency and transparency of the market onto your investments, it's practically a very fantastic environment. You're able to hedge your inflation to hedge inflation and exchange rates in an efficient and transparent manner. And I think that's the superior advantage AFEX brings into the market.
And what kind of investment product has AFEX made available for investors? And what's the ease of entry? I mean, who can enter into this market?
Virtually anybody can enter into this market. Virtually everybody and anybody can enter into the market. And I'll take it that the ease has dramatically increased because as we've mentioned time and time again, we now have a platform called COMEX by AFEX, and we are expanding the options that are available for investors to come into the market. Just by our own evaluation of the market and the engagement we've had with investors in this market, we now have a wider range of products, ranging from the spot contracts that are quite, that you are then playing against price movements in the market, to the fixed income, commodity-linked fixed income instruments, where you now have your input notes, like as we've discussed, your trade finance notes, and then the asset-backed commercial paper we mentioned some time ago. So you now have a wider variety of assets. And looking forward, what we then think is we continue to engage the market, we continue to talk to participants in the market to understand how they want to play in the market, and as a result of that, expand the array of products that we have in the market. The ease has also increased, like I mentioned earlier, and we now have a number of participants coming onto the exchange, interacting with us as to how to develop products, to bring these products into the hands of everyday investors everywhere.
All right, what's the commodities investment landscape looking like in the future with, how products keep evolving?
I think this speaks to the evolution we started this conversation with. So, like I said, we are in the very early days of building the commodities market here in Nigeria. And what we see moving forward is a case where we are able to expand the array of products we have today. So imagine when we are able to expand the array of products to include derivatives which we are planning. We expand the array of products to expand the ETCs that we have, which is the exchange-traded commodities that we have on the exchange as of today. If we are able to get to this level, we are able to provide value to virtually everybody in the market. And that's where we are looking at, providing the importance of investing, hedging, and then price volatility management as well on the exchange. That's the future. That's where we think the market is going to. All
right. That future looks bright. Thank you so much, Yusuf, for your time on the program. Yusuf Ogumbi is investment manager at AFEX. We'll take a moment now. Business Morning continues in a moment. You stay with us.